Hello everyone! Magandang araw po mga ka-accounting. Ito po ay pagpapatuloy pa rin ng discussion natin sa income taxes under Philippine Accounting Standard or International Accounting Standard number 12. Particularly on deferred tax asset. This is part 3 of 3 videos or presentations that I made. Okay, ano yung natin, objectives in this video presentations? Ito po ay tungkol sa accounting procedures in computing income tax expense. Income tax expense is composed of two components. You have the current tax expense and the deferred tax expense or benefits. And then what is current tax asset and current tax liabilities? Accounting procedures. Number 1, we have to determine the taxable income. Taxable income times tax rate is your current tax expense. The entry is debit to income tax expense, debit to income tax payable. This is your current liability. Current tax expense is the amount of income tax paid or payable for a year as determined by applying the provisions of the enacted tax law to taxable income. Number 2, we have to determine that taxable temporary difference. The amount of taxable temporary differences multiplied by tax rate equals to deferred tax liability or deferred tax because this is taxable temporary difference, so it refers to deferred tax liability. The entry is debit to income tax expense, credit to deferred tax liability. Number 3, we have to determine the deductible temporary differences. The amount of deductible temporary differences multiplied by tax rate equals to deferred tax asset. Entries deferred to deferred tax asset, credit to income tax benefit. So income tax benefit is a deduction from your total income tax expenses for the current year. Number 4, the total tax expense for the year is the current tax expense plus the deferred tax expense arising from taxable temporary difference or deferred tax liability minus the income tax benefit arising from deductible temporary differences. The total income tax expense for the year actually is equal to the accounting income subject to tax multiplied by the tax rate, assuming there is no future enacted income tax rate. Current tax liability and current tax asset. A current tax liability is the current tax expense or the amount of income actually payable. This is classified as current liability. Under our income tax law, income tax for corporations is payable every quarter. If the amount of tax already paid for current period exceeds the amount actually payable for the period, the excess is recognized as current tax asset. Actually, current tax asset is a prepaid income tax and shall be classified as current asset. A current tax liability or current tax asset shall be measured using the tax rate that has been enacted and effective at the end of the reporting period. Current tax. Current tax is the amount of income taxes payable or recoverable in respect of the taxable income or loss for a period. Current tax, as I have said, is equal to your taxable income times the enacted tax rate. Assuming the tax rate is 30%, based on our previous illustration, current tax is computed as follows. Taxable income 500,000 times 30% equals to your current tax of 150,000. Recognition and measurement of current tax. Current tax expense is the amount of tax payable or recoverable in respect of the taxable profit or tax loss for the current period. current tax asset, and current tax liability. If the amount already paid to the tax authorities exceeds the amount due for the period, the excess is recognized as an asset, current asset. Unpaid tax for current period and prior period should be recognized as a liability and charged to profit or loss as an expense. Thank you.